Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let's try to look for decent trading occasions. I warn you, it will be hard this week because many instruments are in the sideways trends and we just have to wait. Sideways trends are not the best place to trade in. Price can go both ways easily without any news whatsoever, without any signal. So what you need to do is to wait for the breakout, and then you can think about opening a position. Let me show you those, but first, macro calendar, which is pretty empty. What we had overnight was trade balance data from New Zealand and CPI from Australia, which was the most important data, and it came in line but slightly worse than expectations. It caused the weakness of the Australian dollar, but traders are now trying to retrace this movement at least a little bit. And we also had IFO from Germany, which came slightly better than expectations. We will check if that helps euro or not, but the combination of this data, so worse from Australia, better from Eurozone, should strongly affect euro to Australian dollar. We should be much higher here right now. Data from Australia did affect the markets, as you can see here, especially on our hourly chart. You will be able to see this, boom. But the data from Germany did not happen much. So what is happening on euro to Australian dollar is the bounce from this ultimate horizontal support on 1.571, 5710, and this is another bounce from this level. We had it here, here. So we do have a prices respecting horizontal resistance, prices respecting horizontal support, and here we are waiting for the breakout. And breakout here can be huge because, well, many people were waiting for that here last week, 2 weeks ago, last week, this week. So the amount of people that are waiting for the breakout here and are seeing a great trading opportunity is growing, still growing. And I bet that once we're gonna have a breakout in one direction, many people will jump in here, and this movement will be additionally fueled by new traders. So we are waiting for this to happen. New Zealand dollar to Canadian dollar. This one is very interesting, very interesting. Why? Well, so far we do have a sideways trend, right? So it's not the place where you should trade. But the thing is that in this case, sideways trend can be beginning of something good. Why? Because New Zealand dollar to Canadian dollar is a pair which like trends. So we do have, look at this. I'm back, let's say to here, to 2013 May. Uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend. Here is a place where we had a sideways trend. Okay, fair enough. But downtrend, uptrend, downtrend, uptrend, downtrend. So this pair goes in trends. This pair loves trends. So once this sideways trend will finish, we should get a strong movement. On a weekly chart, you can see that we are on the long-term uptrend line, so we can get a strong upswing. First resistance for this upswing will be here. So imagine this. Imagine the price breaking the upper line of this formation here, stop loss is somewhere here on 50 pips, and potential profit is on 400 pips. That's a great risk to reward ratio. Sell order will be a bit worse in terms of the reward because you will get a target here on 300 pips, let's say, even 250. So not the best, but still okay. Actually, in terms of the potential target for this, we should get the Fibos here. 38.2, that's the place where the price should go. So imagine opening a short position here below the support, stop loss somewhere here on 50 pips as well. Also 400 pips, so not so bad. So as for now, we are on side of a sideways side of the triangle, and we are waiting for the breakout. A breakout to the upside would be very good in terms of the risk to reward ratio, and actually we are waiting for this. American dollar to Japanese yen is another pair where we do have a sideways trend, quite surprisingly, because that is a perfect place for a bounce. Let me show you this. So the price is bouncing from the midterm uptrend line and from the long-term lower line, upper line of the symmetric triangle pattern, right? First contact with this support created a hammer here. Second contact with this support created smaller candle, but also with a long tail. But this candle is much worse than this hammer. On hourly chart, what do we have here is a symmetric triangle. So, how to trade this? Well, come back above the green resistance will be a buy signal, and breakout of this lower pink line will be a sell signal, because that would mean a comeback inside the triangle below the long-term uptrend line, and it would mean a breakout of the horizontal support, obviously. So all major supports would be broken, and that would be a super strong sell signal. But the breakout of the upper line of the triangle and come back above the green resistance would be a nice buy signal. So in my opinion, this is how one can trade American dollar to Japanese yen. Now gold. Gold is mixed. I think this head and shoulder formation is kind of ignored here. I think we can remove this line. So what we are having here is definitely this support is growing. Importance of this support is growing. Unfortunately, it seems more like a flag. So a downswing, correction, downswing, correction, which should end up with a downswing. But come back above the orange area will be a buy signal. Here is Australian dollar to New Zealand dollar. I told you yesterday that breakout of this support will be a strong sell signal. The price did not break this support. The price bounced from the support, touched the horizontal resistance. And this kind of the movements we have recently. As you can see, I think this line can be removed here. So what we have is our sideways trend. So downswing, upswing, downswing, upswing. No directional movements. So trend followers are either of the market or they are taking the beating. I'm a trend follower. Yesterday I got a stop loss order. Now I don't have any position. I'm just waiting for situation to develop. I'm not gonna force myself to trade if there is no good setup. Bitcoin is well, that was a great session, but recent movements are very technical, right? So inverse head and shoulder formation, breakout of the neckline, rectangle, which is a trend continuation pattern, breakout of the upper line, so a trend continuation, and the price seems higher. That was really nice and clean setup. Now British pound to Canadian dollar. Here I had a short position. which was open here, stop loss was here, so as you can see it was triggered yesterday. Today the price went even higher to 173.17. My stop loss was on 1.7305, something like that. I would be still on loss. This strength of this instrument is very surprising for me. Obviously I know that everything can happen on the market, but really the chances for a drop were much bigger. Maybe my stop loss was too narrow, because there is still a bearish situation here, especially after this H4 candle. I entered after this H4 candle. It was also nice, but it failed to bring us a sell signal. The thing is that the situation did not change much, so we do have this head and shoulder pattern, breakout of the neckline, test as the neckline as the resistance. The previous H4 candle can be a false breakout, and that's still an interesting selling opportunity. A breakout of this red line can bring us a sell signal. New Zealand dollar to American dollar. Here we are waiting for a reversal. The price is inside of a symmetric triangle pattern. As you see, many symmetric triangles patterns. We are trying to break the upper line of the triangle and a long-term downtrend line, but in my opinion the buy signal will be triggered once the price will break this horizontal resistance here marked with orange color. Quite surprisingly though, because on a weekly chart, the breakout of this horizontal support should bring us a further drop, like a huge one. A drop that would equal this one. Euro to Australian dollar. Here also sideways trend. Shouldn't be surprised with that. Most recently I think this line is more accurate. So we are waiting for the breakout. Not much to add here. WTI oil, a downswing wedge, downswing test of the lower line of the wedge as a resistance. Okay, fair enough, but we can also change this lower line, and instead of a wedge we get a flag. Both of those formations still promote further downswing, so maybe we'll get another test of those two trend lines and then maybe further bounce. Silver, this flag, as we said yesterday, this flag was denied because the price is more willing to go for this inverse head and shoulder formation, left shoulder head and right shoulder. Neckline, I don't think that this neckline was respected much. We have a new support here. In terms of the patterns, maybe this flag, so downswing flag and a downswing. Everything depends from this contact with the orange area, so a breakout, buy signal, bounce, sell signal. Swiss franc to Japanese yen. That was a false breakout yesterday of that support. If you went for it, that was a loss. Overall, that is a decent setup, but the price cannot decide now. On a weekly chart, this should result with a strong drop, but as you can see now, the buyers are fighting for the bounce. In my opinion, well, we have a high chances to break this support. Actually, we can adjust this line to the current situation, because here lows are 72, yes, so we need to adjust this line here and here. So breakout of this pink area will be a sell signal. Keeping in mind that there is still this neckline here. American dollar to Swiss franc. So we said that the breakout of the lower line of this flag will give us a sell signal. That's what's happening. One of very few good setups now. Is that tradable as we speak? Well, H4 chart is interesting here because, and a daily one, because you can see breakout of the downtrend line, tested as a resistance, and boom, that should result with a further drop. And that's a classic one. So a drop, small correction, and a downswing. Most probably we reverse 38.2 exactly here. And the first target is here, so let me estimate the risk to reward ratio. You sell here, stop loss around 30 pips, take profit around 60. Well, still interesting risk to reward ratio. Yes, on hourly chart I think like that line was broken here, so short now 30 pips. Yes, that's quite good trading opportunity. 60 pips, take profit, 30 pips, stop loss. According to the technical analysis, that is a good option. American dollar to Canadian dollar. Also, we said yesterday that after such a strong drop, we usually have a correction here. But eventually the price should follow this drop, and that's what the price is doing. That was also supporting my view on British pound to Canadian dollar, but well, British pound was heading higher and higher. Fair enough, I lost that one. But the American dollar to Canadian dollar is trying to break the long-term uptrend line, which can bring us a sell signal towards those lows. In terms of the risk to reward ratio, if you sell here, stop loss 40 pips, take profit 70. American dollar to Swiss franc is better. Seems like a better option. Euro to New Zealand dollar, still inside of a long-term flag formation. We are waiting for the breakout. Breakout of the upper line of this formation is more probable and will bring us a buy signal. Euro to Swiss franc, that's interesting one because the drop, wedge, breakout of the lower line of the wedge, test as a resistance and then bounce. But for the proper sell signal, we need to see the price breaking this pink area. New Zealand dollar to Swiss franc, drop correction, drop correction, drop correction. It should end up with a drop, especially that the price making lower lows and lower highs. Yes, but that's not the strongest setup. Actually, I'm gonna remove it. And British pound to New Zealand dollar. Here we do have a symmetric triangle waiting for a breakout on a weekly chart. On a daily chart, breakout of the upper line, buy signal, breakout of the lower line, sell signal. Pretty clean setup. On H4 chart, drop, correction, drop. That should end with a drop. Pretty, not this one. I don't want this one. Here, lower line, upper line. That's a wedge. So drop, wedge. It should end up with a drop. With quite alright risk to reward ratio. Also horizontal resistance, false breakout here. The potential target is on this lower line. So a breakout, let's say here, stop loss maybe 50 pips, take profit 230. That is an interesting opportunity. So actually I'm gonna move this American dollar to Swiss franc to the left. because that is a good one. New Zealand dollar to Canadian dollar. That can result with a New Zealand dollar can be much stronger, but we will see. Okay, so those are the instruments that we had recently. Now let's analyze the remaining instruments. Those we had before. Indices, DAX, DAX is still in a negative territory because all that is a right shoulder of a possible inverse head and shoulder pattern. Not inverse but normal head and shoulder pattern. That is also a flag which promotes a further downswing. Let's check Nikkei. No. FTSE. That's a wedge. Here. Here. This formation is promoting a further drop. S&P 500 here. S&P 500, as you can see, it's all good. In America, traders are pushing higher, so they are coming back to the business as usual kind of trading, just pushing higher every day. Let's see if anything emerged. For example, on cable, this is the strength of cable that we saw recently. It can be a problem now because it may result with a false breakout of this horizontal resistance. So that may be a false breakout which can result in a drop. We'll get a stronger sell signal when the price will break the red area. But for now it's all good. New Zealand dollar to Japanese yen is meeting an important place because that's a head and shoulder pattern, but actually it's nothing major. Euro to Japanese yen, how does it look like? No. Look at that. That's just a very boring trading here. So no surprise that those instruments are not on my radar because there's nothing happening there. Okay, let me remove this. So Euro to Australian dollar waiting for the breakout. New Zealand dollar to Canadian dollar also. And here also. As you can see, sellers are pushing lower now. Here, American dollar to Swiss franc, proper sell signal. Unfortunately, the price is pushing lower, so the risk to reward ratio is getting worse. Your stop loss needs to be wider and take profit is closer. Gold, nope, nothing. Positive Bitcoin. Here, well, British pound to Canadian dollar is pushing lower. According to the technical situation, unfortunately, I was not able to catch it. New Zealand dollar tried to push higher, and the breakout of those two can be huge. Silver very close to an interesting signal. Here, no. Here, this setup is awesome on a weekly chart, but we will see what will happen after at the end of the week. So those are the best setups. Euro to Australian dollar waiting for the breakout. Waiting for the breakout. New Zealand dollar to Canadian dollar. American dollar to Japanese yen, waiting for the breakout from the triangle. Here, proper sell signal. Here, waiting for the breakout of the orange line. Come back below the orange line, sell signal. Here, very close to a sell signal or a buy. And here on a weekly chart, very negative situation, but we need to wait for the situation to develop. Okay, that's the market analysis for today. Unfortunately, many sideways trends, not many signals, but well, sometimes market moves like that, and you cannot do anything with this. Thanks for watching. Now a half an hour break, and after that we'll have a webinar about MetaTrader 4, so I will teach you how to use the platform. Okay, all the best and see you in a bit.